Start trading on MEXC now. Get your $10,000 bonus when you register. Link in the description.
Hey everyone, welcome back to the channel, your daily source of the hottest crypto news. Don't forget to like and subscribe so you never miss an update. Let's get started. $20B crypto bloodbath. Why Friday was the darkest day for crypto ever. Jonathan Mann, portfolio manager at Bitwise, described Friday's carnage as the worst liquidation event in crypto history, estimating over $20 billion in forced sell orders. During the crash, Bitcoin plunged nearly 13% from peak to trough in about 1 hour, while long-tail tokens saw even more extreme collapses. Open interest across futures markets was decimated, roughly $65 billion in positions were wiped out, pushing trading desks into disarray. The episode exposed deep structural fragility in many markets. Order books were thin, automated deleveraging mechanisms, like auto-deleveraging, triggered, and liquidity evaporated. Some tokens, like Atom, dropped so hard on certain venues they nearly went to zero before rebounding. Despite the shock, Mann suggests this reset might clear out overextended bets and reframe market structure going forward. Traders are now assessing whether the rebound is over or new support zones will emerge under this changed landscape. Hyperliquid obliterated, 6,300 wallets crushed in historic crypto wipeout. In a dramatic fallout, Hyperliquid, a derivatives trading venue, saw one of its worst days ever. Over 6,300 wallets recorded serious losses, with more than 1,000 completely liquidated. Platform data shows at least $1.23 billion in trader capital evaporated there alone, while the broader crypto market saw over $19 billion wiped in 24 hours. Among the worst hit were whale accounts. 205 wallets lost over $1 million each. The collapse was triggered by renewed trade war tensions, particularly the U.S. administration's 100% tariff threats on Chinese imports, which stoked panic across markets. On Hyperliquid's leaderboard, top traders ironically gained billions collectively, capitalizing on others' forced exits. This extreme volatility further rattles confidence, as fragmented liquidity, tight margin calls, and algorithmic cascades contributed to one of the harshest market resets in memory. Doge goes to 0.1150%. Flash, crash, then miraculous recovery. Technical indicators suggest the $0.19 level may act as a new floor, but fragility remains. The dramatic fall and rebound underscore how meme assets can be hypersensitive in crisis moments and how quickly markets can attempt to stabilize even after extreme moves. Dogecoin stunned markets by crashing 50% in a matter of minutes, plunging from to $0.22 to $0.11 before clawing back to the $0.19, $0.20 range. The fall was triggered by systemic shockwaves. The same tariff news that rattled Bitcoin rippled through altcoins. Over 4.6 billion Doge traded during the flash crash, roughly double its daily average. Exchange outflows surged, with $23 million worth exiting, and whales began reaccumulating aggressively. The price oscillated violently within the session, with intraday volatility exceeding 57%. Some of the bounce back was aided by institutional flows, while retail sentiment tried to prevent further capitulation. Bitcoin bulls get slapped. Trump tariff shock sends BTC under $119 kelvins. Bitcoin's recent gains were undone in a flash when President Trump floated a fresh round of tariffs on Chinese goods, triggering panic across crypto markets. BTC tumbled from highs above $122,000 back under $119,000 as the news reignited U.S.-China trade war anxieties. Ether, Solana, XRP, and others followed suit, exacerbating the rout. The reversal was swift. Markets had grown complacent on assumptions of policy easing, but the tariff rhetoric shattered that confidence. Crypto-adjacent stocks also fell 5–6%. The move exposed how vulnerable markets remain to macro headlines. Traders are now watching whether BTC stabilizes around $118 Kelvin support or slides further into deeper correction territory. The sell-off highlights that even when fundamentals look strong, geopolitics and regulation can still deliver brutal volatility. ARK Invest sees Bitcoin launchpad to Q4 gains despite market mayhem. Despite last week's chaos, ARK Invest remains confidently bullish on Bitcoin heading into Q4. Their latest Bitcoin quarterly report argues that the on-chain fundamentals still point to strength. Active wallets, supply profiles, and demand metrics are all resilient. ARK highlights that institutional entities now control over 12% of Bitcoin's circulating supply via ETFs and trusts, providing a structural base of demand. Macro tailwinds like easing inflation, policy shifts, and liquidity expansions could further support upside, though ARK warns about timing risks and cyclical overextension. They propose that while volatility will stay elevated, any dips may offer value. In essence, the firm views the recent market reset as a potential clearing of excess leverage rather than the start of a bear reversal. Those were today's top crypto news. Make sure to hit that like button and subscribe. A brand new video drops tomorrow. Stay tuned.
Best crypto exchanges, wallets, and all helpful links for traders are in the video description.